Markets are moving faster than ever. Central banks are pivoting, liquidity is drying up, and volatility is, well, everywhere. But while retail traders scramble, institutions are adapting. In today's special edition of the Market Brief, I sit down with Ruan Landsberg from Fortress Core to unpack how the pros are playing this new game. Hi there. My name is Francois and I'm the market analyst here at ATFX Africa. Joining me today is Ruan, a seasoned market strategist and someone with a sharp eye on evolving market dynamics. Ruan, it is so great to have you back on the show.
Hi, Francois. Yeah, thanks for having me back. Yeah, it's a, a slow start. Like I said to you, obviously was out of the market for about 10 days now. But yeah, everything going good. Recovering, feeling a lot better today. Obviously not seeing the markets for 10 days, then coming back and actually seeing the bonds pairs moving this morning. Dollar is moving, everything is moving. Yeah, for a lot of traders, it's panic. But for me, the more volatility, the better. I think there's a lot of big opportunities coming into the week with NFP week also coming up now.
Absolutely fantastic. Ruan, since our last chat, we've seen a lot more aggressive central bank pivots and even more geopolitical developments. How have institutions changed their risk models, or how has their risk models evolved to account for this increased macro instability?
Well, I think with the political tensions, I think obviously it's in a way it's exploding, but it's obviously stabilizing also because if we look at the tariffs are actually coming to an end now. It's getting signed. Everyone is agreeing to certain terms. Yes, we obviously have more wars coming along, more political tension coming, especially in South Africa as well. But I think everything is stabilizing out. I think everything that Trump said or has been doing is coming to at least an agreement. I don't think it's stable, but I think at least if they get to terms with the other parties, that obviously means that both parties are happy with what is happening. So I do believe we should see some stability coming back to the dollar. I mean, if you look at the dollar as well, I was actually just doing a update for myself and before the call. And if you look at the previous downtrend or the bearish momentum we've had on the dollar back in, I think it was yeah last year, 2024, we've already reached the same dollar value move to the downside on dollar index. So I do believe actually we should see some stability. I don't think the dollar is going to keep falling off a cliff. I think it should come back a little bit, and I do believe the funds will also use this to their advantage for the longer term plays. I think we've seen them hold back a little bit in the first 2 quarters of this year. So I do believe funds should start allocating some more capital soon.
That's very interesting that you say that. I mean, especially around key economic events like FMOC minutes and NFP that's coming up on Friday, plus FM the interest rate decision that will be taking place this week as well. I mean, we've seen a lot of liquidity thinning a little bit, as I said, drying up a little bit, which has led to a very large increase in volatility around these specific events. So, I mean, even yesterday saw on Sunday, actually, sorry, we saw an EU-US trade deal being struck as well. Do you think this is the primary driver behind markets at the moment, or what do you think is driving this, and how are institutions specifically adapting to this, well, new landscape that we are seeing?
Well, I think at the moment everyone has been sitting on pause. I mean, we went into Q2, Q3 a month ago, and I mean, you could see if you just look at the structures and you look at the market has been really quiet in the first month going into the third quarter. So I do believe everyone has been strategizing. Everyone has been sitting around and saying, what's the next move? What's the next upcoming potential? I don't think it's just to do with the tariffs. I also think there's a lot of other political things happening outside that is affecting the countries. I mean, the world has been struggling to say the least. I mean, most countries has been struggling financially. There's been bubbles being created across the world. We've seen the tensions pick up as well around the interest rates in the US. I mean, he wants to fire Powell now going forward as well. So we'll see. There's actually so much craziness going on that it's so difficult to point to one or two key factors. I think if you as a retail trader just keep cool, in a way, stay away from all the noise that's happening around the market. So take note of it, but obviously don't let it affect your longer term trading decisions. I always say if you're a trader, always start with the logical mindset when you approach a market. Think logically of what is the structure doing, where's the market going, where's the sentiment of this specific currency going. If you have the logical mindset of like, okay, dollar index should see recovery going into the next month, then you already know, okay, your USD you're looking for shorts, or USD you're looking for shorts, etc. So have that logical thinking, stick to that logical thinking, and just trust your plan.
Zero commission on stocks? Yeah, nothing. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
Absolutely fantastic. And, speaking on that specifically, now, I mean, literally in the last couple of weeks, now I know you said you were away from the charts for 10 days, but I mean, when you started looking at them again today as well, you probably would have started seeing that S&P new all-time highs, Nasdaq new all-time highs, Euro USD is at a high that we haven't seen in years. And this is all due to an influx of dollar weakness. And in your opinion, and based on some of the conversations that you are having as well with other institutional traders, do you believe that, this rally is overextended, or is this only the start and there is a lot more upside to come?
Well, I mean, I think that comes back to, in a sense, my previous answer as well. I think a lot of traders, especially retail traders, they do overcomplicate it. If you look at once again, the logical thinking behind, let's say, Nasdaq, for example, it's technology. We are in an era of AI. We are in an era of where technology is pivoting to a point where, like, moving at a rapid pace. So if you look at the top 100 companies on the Nasdaq, like, it's gonna go to the top side. The value is gonna keep increasing. AI is being introduced, so the logical side always is Nasdaq should keep going up. So now, obviously, with dollar index dropping to the downside with the political tensions, that obviously just increases the value of Nasdaq. So for me, I don't think Nasdaq is going to see, if it's going to see a recovery, which it should. I don't think it's going to be a drastic recovery. I mean, on Nasdaq, once again, we've seen some really big recoveries, especially beginning of this year. But I don't think the recovery coming soon is going to be a big recovery. I think at the moment it is politically driven, but I think it's more AI driven, and everything happening within the tech space.
Absolutely awesome, man. As a question, now you just stated that retail traders overcomplicate things most of the time. And especially when it comes to liquidity and institutional flows, this is something that a vast majority of retail traders have a serious misconception about. And I think this is really attaining to what we are discussing at the moment and how retail traders are misunderstanding what is currently taking place within the market. So, in your opinion, what are some common misconceptions that retail traders tend to have about liquidity and institutional flows when they look at their charts or approach the markets?
I think that the biggest thing is obviously that retail traders think that the banks are trading against them. I think that's a key thing that I've always heard, is that people do believe the banks are going to spike them out. And for me, that comes for me, the market is always about logic. If you look at the logic behind it, there's not a guy running $6 billion sitting there and looking at Ruan Instagram and thinking, okay, this guy is selling USD, let me quickly buy it. Like, yes, there is a buyer for every seller, but then of the day, the institutions is always doing the same thing. They've been doing the same thing. If you look at anything, currencies, Nasdaq, whatever it might be, Nasdaq you can't go back that much, but let's look at currencies. If you look at currencies, the market itself and the movement, everything has been doing the same thing over and over for the past 15, 20 years. If you actually go back in time and you look at key support areas, psychological levels, all these things on any chart, it's gonna come into play on all these major currencies like AUD, USD, USD, JPY, etc. And that tells us the story of what the institutional traders have been doing is what they're going to keep doing. So the market structure is pretty simple, and it's formed by the highest players. I've always said, if you think about trading realistically, you are trading the opinions of people with more money than you as a retail trader. So you need to think like that 1%. What will they do in this situation? And that's where we see guys seeing Nasdaq going into new highs, and immediately people will say it's overbought, and then they will start shorting it. Where if it's making a new high, just go back to the logical side of trading. After a higher high, you have a higher low and then a higher high. That's the simple concept that's been working for the past 20 years. So now saying that, okay, now it's overbought, let's start shorting it. That once again goes back to the retail mindset versus the institutional.
Super tight spreads. Yeah, tighter than your jeans after Christmas lunch. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
That is so true. And I mean, this is one of the reasons why I love having these type of discussions with you. And we've been having these discussions for years, and every single time your answers are very similar in that regard. And it's crazy to see how people are, still not really understanding those core fundamentals most of the time. Now, as we are finishing off July, this week we are going to see a Fed interest rate meeting take place, as well as on Friday, we will see the NFP jobs report being released. In your opinion, are we going to see an interest rate cut finally this week? Do you think that's going to actually take place? I mean, especially with Trump putting so much pressure on Powell lately. And then as well, adding on to NFP. I mean, literally for the fourth time this month, or fourth time this year, they are predicting a weaker NFP report. But NFP has been surprising us month on month on month on month. Do you think that trend is going to continue this week? Do you think we're going to see a stronger NFP, or is it finally going to start dipping? What are your opinions on those two key fundamental macro events that we'll be releasing this week?
So the interest rate specifically, I mean, I haven't done my research to be 100% honest with you. Obviously, once again, haven't been on the charts for the past 10 days. I haven't actually seen the results of what we can expect, because obviously with interest rate, once again, there's a big difference between interest rate and, for example, NFP. NFP is a data release where interest rate is going to be a full-on discussion of that's already pre-planned, and no one knows what's really going to happen in that specific interest rate. We've seen it multiple times where the guys will say that they're going to cut interest rates, and once again they just go and turn around and do the exact opposite. And I don't think it has anything to do with what's best or better for the economy in the US, to be 100% honest. I think it's just about how does Powell or whoever makes the decision or the final decision feel about Trump on that specific day. Because they say, yes, we're going to cut it, and then obviously they go behind Trump's back and they do the exact opposite. So I think in the US interest rate at the moment, I don't think it's going to change. I think there's still a lot of tension to sort out. That's just my honest opinion. NFP, I mean, NFP for me, outside once again. So I'm going to give two answers: institutional versus retail. Institutional, once again, NFP has been quite stable. If you look at the numbers, we're not nearly where we're supposed to be. If we are expecting at least the dollar to make somewhat of a comeback, in the sense of some bullish momentum coming through. We've obviously seen Trump getting a lot of new investments coming in, the trade deals going through, etc. So I don't think NFP is going to decline. I think the numbers we at, just historical data, we haven't been at these numbers for a long time. NFP has never came back at 139, 147 consecutively. So the only time we've been lower than that level is once. So the probability then for a retail trader, it's about probability. So if you look at the forecast, it's 147 previous, 108 forecast. So the probability of price coming back, or the data coming back lower than 108, is 1%. The probability of data coming back higher than the 108 is way higher. So for me, I'm still bullish on that, and I do believe with the recovery we'll see on the dollar this week, NFP should be moving or helping just break that pullback on the bullish pullback, for price to eventually obviously continue with the bearish momentum.
Thank you so much. As always, these were absolutely amazing, powerful insights, and thank you for sharing. And thank you for joining us again and helping our audience bridge that gap between institutional and retail trading. And then, traders, that brings us to the end of your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa and experience the difference for yourself. Traders, until next time, Stay sharp, stay focused, and trade smart.